Hey everyone, Codex here. So today what we're gonna do is take a look at Elrond's native token EGLD, and we'll be discussing what has been happening in the past few days with its price action. So Elrond hasn't really been the best in the last few months in terms of performance, and even when the vast majority of altcoins have surged in the last month, EGLD has really had a very hard time making new highs and breaking above its resistance, which we of course mentioned in a previous video. And yes, we've been indeed going up this week and we are already up 20% in the last 7 days, but as I said, nothing is really happening because in the scheme of things, we are still trapped between these two areas moving in the same exact range. We are literally moving sideways in here. Now, if we open up the Phoenix Ascending Indicator on the 3 days time frame, you can see that the blue LSMA and red RSI, which by the way are responsible for triggering the upward or the downward pressure, we can see that both lines are still having a very rough time breaking above the mid yellow line. The blue line has already managed to do so. It has already managed to break above the level of 50, but the red line is still at the level of 48, which explains the weak momentum. And this also explains why we have been going in the same range up and down. The state of our momentum indicator, or the state of the Phoenix Ascending Indicator, simply shows that buyers don't have a whole lot of interest in this area. And this doesn't mean that we can't go higher, it just means that the trend is very weak. And with such a trend, you can't really expect us to rally and to do a 2 or a 3x like other altcoins, like Matic for example. Overall, I still haven't changed my mind, and as I said in the past, I believe that we will remain below this resistance. We discussed how tough this level is, and we mentioned how it has played an amazing role as support last year and also a few months ago in 2 different occasions. And so to me, it seems very hard that we will break higher above this area anytime soon, given the slow upward pressure that we've got. What I want to clarify in here is that I'm not saying we don't have a bullish momentum. I never say that. I mean, I just say that we are up about 20% in the last 7 days in the past week, which is pretty decent. However, there is a difference between performing like Matic, which is up 3x from its bottom, and performing like EGLD, which has been somewhat deceiving if we are being honest with each other. Now, according to the VPVR indicator, which shows where the high activity is happening, we can see that we do have a massive spike in this level. So around that $38 to $39 mark, and so this remains the area of interest. We mentioned this level at first about 2.5 months ago before the drop even happened, and we drew it perfectly. And based on the traded volume in here, this is still the area where I'll be interested in accumulating much more. It might take a while, it might take a lot of time before we head back in here, but based on this trend and based on the weak momentum, it seems very clear that we aren't really going to experience any significant rally to the upside, of course. Look, outside of crypto and when it comes to the economy in general, we are still getting hammered, okay? You have to keep in mind that inflation is at 9.1% in the US, which is the highest in decades. Unemployment rate is around record lows in the US too, and wages are still going up every single month, and the GDP growth was negative, okay? This all together might not make a whole lot of sense, but this is pretty much the perfect combination for a recession, which would imply a market crash. We have discussed market crashes in the past and why it's better to partially stay on the sidelines. I'm not saying you should stay on the sidelines, I'm saying partially. So you shouldn't be trading every single day. And I'm also saying, I mean, when we discuss crashes, we discussed why it's ideal if you keep a huge portion in fiat, and we covered how you should not fall for relief rallies multiple times. And I still think that this phase that we are experiencing is just a short-term relief phase, which I said should happen in Q3 before we fall down to lower levels. I don't think that this downtrend is over, although your crypto Twitter friends want to tell you otherwise. But as I said, to me, this seems like a tiny shift to what's good before heading back to hell. My concerns are still the same. My concern is that a lot will fall for relief rallies, especially newcomers. I think relief phases are amazing opportunities to make profits, and if you could take advantage of them, then let it be. But exposing yourself and opening leverage positions left and right and being leveraged to the tits is not what I would do. So this was about it for today. Thanks for sticking by till the end. Also, if you want to store your crypto in a hardware wallet, make sure to check out Decent, get advantage of the $30 discount on the website to store your altcoins, and of course, Bitcoin, Ethereum, and over 1,000 alts in a biometric wallet. I'll leave a link down below in the comments. Have a nice day, and I'll see you in the next one. Bye bye.